Hello, can everyone hear me? Sure? How's Paris been for you guys? Everyone's still sedated by all the baguettes and coffee and Red Bull pre-lunch. Who had more than 10 hours flying into Paris? None of you? Everyone here is based in Europe or less than 5-hour flight? Who's still suffering from a jet lag? Where you flew in from, sir? From? Tokyo. Sir, I owe you a Bitcoin then. Now, let's play a small game here to get you all warmed up. John, good to see you. Let's play a small game. If you guys don't mind, form couples real quick. Ideally someone you don't know. What I want to do is kind of like a warm-up and teach you guys a simple skill on networking. You flew to Paris to meet interesting people, and ideally you want to leave here with at least 5 quality contacts. Okay? So John, bear with me. Now, what you want to do, and your hand is a great tool for that. Okay? Put your thumb up, and the person to your left or to your right, your thumb is actually your signaling, right? Now, when you meet someone tonight, or an after event or lunch, your thumb, the question, what do you do? Hey, my name is Lisa, my name is HN. The thumb answer is your billion-dollar skill. So go ahead and share it. Go ahead. My billion-dollar skill, I'm a market maker, I build the best meme coin. Could be anything, right? What's your billion-dollar skill? All right? Now, the second one. The second one is your pointing finger, right? Where are you going? It points to somewhere. Where are you going, John? What are you building? Did you apply for a license? Are you fundraising? Where do you see your company in 1 year? Where are you going? Go ahead and share that. I hope I have people in front of me with goals, right? Everyone here with a LinkedIn profile, you have goals, right? Now, this one is pretty amazing because my daughter will be like, Dad, don't do that, right? This is kind of like signal something you don't like, right? Regulation, scammers, governments. So go ahead, share this one because this one is a signal as well, right? Something you don't like about your job. Could be a jet lag. Your boss is not happy. All right? Now, this one is pretty interesting. This is where you put your ring finger, your wedding ring. What is the thing you love the most about your job, your career, your goals, your skill? Go ahead and share that. Of course, you're going to go making money. I see you guys. Lastly, your pinky, and it's small for a reason. It's that thing you're pretty insecure about, right? Or you're not good at it. And as we would call it in my company, that thing you don't put on your LinkedIn, right? I'm bad at following up. I'm late to meetings. I don't know how to install Google Meet or how to use it. It's that thing you don't put on your LinkedIn, right? Now, I'm Chen. I run a venture fund. It's my 8th year in crypto. It's the most hilarious, most fun industry ever. I don't plan on leaving. So welcome to my party. Let me announce the first speaker. His name is Balchunas, based in New York. He's an ETF analyst. He's going to walk you guys through the Bitcoin ETF and also the Ethereum ETF, as we saw recently. Eric, you with us? Give him a warm welcome. Take it away, sir.
All right. Thank you for that. And I agree, this is a very fun industry. Just introduction, I am from the TradFi world. I'm an ETF analyst. We cover dividend ETFs, bond ETFs. 60/40 is most of our coverage. So I was thrown into the crypto world about 8 months ago, and it's been quite an adventure. And I will say it is a very fun industry, very lively. So I'm basically here, let me see if I can pass the slides, to give you a few thoughts on the spot Bitcoin ETFs in the United States, which were just an incredible situation, really once in a generation opportunity as an analyst. Just real quick, there's a disclaimer because I work for Bloomberg, which is a group of analysts, with 400 analysts at Bloomberg. So I lead up the ETF team. Everybody else covers stocks and bonds, and this is the team that I lead. The most important person here is Henry Jim, because he covers Europe. He's in the front row. If you have any ETF questions and you're in Europe, Henry's your guy. The rest of the team, US, Asia, we cover the whole world. So let's get into my takes and observations on the dramatic US spot Bitcoin ETF launch. There will never be another launch like this. I know this because the numbers say this. First of all, it took 11 years. Never in the history of ETFs does it take 11 years to launch something. Even the first ETF, it took 4 years, right, to sit with the SEC. There was rejections and rejections. My kid was like 2 years old when the Winklevoss filed, and he was basically out of middle school almost by the time they finally approved these ETFs. And there's the magic words: order granting accelerated approval. I know a lot of you remember that day, January 10th, and it was a sigh of relief. Finally, we get the spot Bitcoin ETFs. And I know I was relieved because this was me for 6 months, basically analyzing 19B4s and S1s, looking at the tea leaves. What did Gary Gensler have for breakfast? Because we wanted to give odds. What were the odds they were going to get approved? James and myself were a little more aggressive than our peers. But we did the work, and it proved to be correct. So we also gained a new audience with the crypto crowd, I think, and trust. We help explain ETFs and the SEC to the crypto world, and I think it's been, again, a journey for all of us. And here's what happened on January 11th. The first ever true horse race of ETFs. I call it the Kentucky Derby. Normally, you file an ETF and you launch when you file, so the ETFs come out staggered. This is the first time the SEC put everybody together. This was a fascinating experiment as an ETF analyst. Who will win? Who will lose? How will it work? Well, as you know, it destroyed all kinds of records. So here's a look at the fastest ETFs to $1 billion historically. This is out of 5,000 launches since 1993. The newborn 9 got there in 2 days. IBIT 4 days, FBTC 5 days. Basically, Bitcoin ETFs make up 5 of the top 10 of that sort of stat, which is, again, unbelievable. Most of them are at way beyond that. Here's a chart showing the assets after 50 days. So if your first 50 days in the market, IBIT has like three or four times more than the record holder. FBTC obviously is double, but even like ARCB and BitB are in there. And BitB is 4th, but still above GLD, which was one of the biggest launches ever. So this is trying to give you some scale and scope for how incredibly massive this launch was relative to the ETF world. So right now, we're sitting on $60 billion of assets. That is a ton of money for a new category that's like 5 months old. Gold ETFs have about 110 billion, so more than halfway to gold already. I think you should be impressed if you guys pass gold. We'll see. I think it's probable, but again, a lot can happen. The trading volume was also tremendous. I talked about volume on Twitter a lot, and a lot of the Bitcoin people were like, who cares? Give us the flows. But I'm like, volume is important because volume is big fish bait. If you have volume in your ETF, you can attract bigger investors. Bigger investors demand volume because they don't want to be like the only person at a party. They also don't want to have impact costs when they trade. They want to be anonymous. So you can see the volume in the Bitcoin ETFs exploded way beyond my prediction. Most of them trade over $50 million a day, even the ones in the second half of the list. IBIT trades over $1 billion. This is big boy liquidity and very important for attracting investors. Also important is the low fees. You guys are in Europe. On the right-hand side of the screen there, you see all the ETFs besides GBTC are between 20 and 30 basis points of a fee. That's really cheap. It's cheaper than I thought they would be. If you go to Europe or Australia or other vehicles like hedge funds, all that stuff is over 1%. So these are 5 times cheaper than really anything else you can get your hands on. That is tremendous. And you add low fees, with the liquidity plus the brand names, it is a powerful combination. It basically checks the boxes for some of the bigger investors. If they hate Bitcoin, they're not buying it anyway. But if they have even an interest, it won't be the ETF's problem. And this will be something that will make it easier for them to invest. This is why the institutional holders came early. This is a look at the number of holders in the first season of 13Fs. So IBIT had over 400. The group had about 600 holders. That is incredible. That's a list of other ETFs that launched in January. So these are other sort of normal ETFs, like Nukes is a nuclear power ETF. It had 1 holder. So to get like 10 holders in the first 13F season is incredible. So to get hundreds is just absurd. I expect these numbers to grow over the next few quarters as well. Bitcoin is also up a ton. It's up 55% since the ETFs came out. Now, I think that's great. Yet, I feel like the Bitcoiners are a little spoiled. It goes down for a couple days, and they act like the world's falling apart. I'm like, relax, you're up so big. And then it was up 80% before the ETFs. So because of the ETFs, you basically doubled the price of Bitcoin, just like that. Now, I do think you need new narratives. It can't just be the ETF. And I know Bitcoin, I shift the focus back to what Bitcoin's good for. If you can sell the narrative of Bitcoin, the ETF flows will take care of themselves. But I wouldn't get too stuck on just making the ETFs your whole sort of like catalyst. And to that, ETFs only make up 4% of the owners of all of Bitcoin. This is a chart showing who owns Bitcoin. So there will be other things that affect the price of Bitcoin. The ETFs are 4%. Maybe they're 7% of the float, in other words, the tradable Bitcoin. In the stock market, ETFs own 8%. So you could say we're almost already where we are at the stock market, but equity ETFs have been around for almost 30 years. So we're already at 4% or 7% of the float. This could get interesting. How high does that number get? Because again, Bitcoin is supposed to be somewhat decentralized. This is almost like centralizing it a little bit. Now, despite all that success, there's still the haters. You know, they're just going to find something, and you know who I'm talking about. First, it's like they won't approve it. Then it was like, oh, but it won't get any assets. Then it'll be like, well, not all of them will get assets. The new thing is, oh, it's the wrong investors. These are boomers, and they're going to like jump off anytime there's a little volatility. I am here to tell you that the boomers will be better hodlers than you think. They could even be better than some Bitcoiners. I mean, just look at them. These people are hardened. They've seen a lot in their lives. They've lived through active mutual funds, and they found ETFs. If you find an ETF, you're smart because you're not getting ripped off. It's funny, in France, we're hearing about everybody in mutual funds because they get a kickback. You're paying through the nose for those funds. You'll get like no money in retirement. So if you leave that system and find an ETF, you're already pretty wise. And then we look at the times that stock market sold off, ETFs still took in money. So ETF flows have shown they're very durable. They still take in money even if the market's down. Mutual funds not like that. And finally, the modern day portfolio is like cheap beta, like index funds, like 60-40. And that's the money you put, you marry that money. You sit there and you never touch it. But people want to dabble a little with some hot sauce. So to me, Bitcoin fits on top like hot sauce for a normal 60-40er. And if the serious money is already in stocks and bonds, you can handle more volatility because it's not your whole investment. For that reason, I think the boomers will be good holders. And my last section here is on Ethereum ETFs, which are probably going to launch in a month-ish. They will be lucky to grab 20% share in the US. Look, Ether people think I'm down on them because of I've been saying you're going to be smaller than Bitcoin, but I'm just looking at the facts here. In other places where there's apples-to-apples comparisons, like in the US futures or in Hong Kong, Canada, Switzerland, where you have both, you know, it's from 10% to about 30%. So I'm sort of splitting the difference at about 20%. The other thing is, I think Ether is like silver to gold. A lot of people who own gold, who are 60-40ers, have no desire to own silver. They're fine. I got my precious metal, I'm good. I think people will be satisfied with Bitcoin as their, quote, crypto hot sauce. You know, some people will seek out Ether, so I could be wrong. This is my estimate on that. And the other thing is, how do you explain, oh, some of this stuff didn't come through. Let me go back one. There's supposed to be a chart here, but how do you explain Ether in like a one-liner? So if I was talking to a 60-40 boomer, I say, Bitcoin, it's digital gold. What is that for Ether? So I polled Twitter, what is your one-liner? So I got programmable money, digital oil, and world computer as the top 3 answers. They're pretty good, but they still take a little more explanation. What do those things mean? So to me, the speed of communication for Ether is a challenge as well. So with that, this is some ways to find me. There's another book on there that didn't make the cut, unfortunately. But I have a podcast, a TV show, and some books. So with that, I want to bring on our panel, or at least the host, and I want to thank you for your attention.
Yeah, right. We can fix. All right, all right.
Stay up here.
How you doing, sir?
Good.
Now,